Okay, man, yeah, come on. Y'all know I can't get this stuff together. I got a lot going on. All right, there's a lot going on. It's tax season. We all know this. So let me give my disclaimer. Make sure you get your taxes done, and have somebody prepare them that knows what they're doing, and maximize your deductions, all that good stuff. I've been saving my tax monies to pay for taxes. So far, things are looking good. So we'll see. But the 15th is tomorrow. So yeah, get your stuff done. Anyway, I haven't done a lot with this programming in a while, and I gotta get reacquainted. So hopefully today is a good experience with programming, because I honestly, I don't feel like at this point, I don't feel like it's riding a bicycle. I feel like it's something else. Riding a bicycle, you get back on it and then you just go right to it. I don't feel like it's quite like that. I feel like it's like I've got to do a little bit more to get back into it. So a couple of things I was doing before I took a little bit of a break from programming was I was working on the global dictionary, and I was able to get that figured out, so that was good. So let's take a look at that. Here's the global dictionary. Give me a second. Let me close this other stuff out. No. Apparently, I'm not tech savvy enough. I've got to do better. Got all my business in the streets. All right. Yeah, for real. Okay. All right. Let's see. Let's open up the coding environment. You know what? I'm just gonna have to stop doing lives. I'm just gonna have to. But it's easier for me to do lives because once I'm done, it's done. I don't have to go back and, not that I necessarily need to edit or anything else, but I don't have to go back and allow the computer the time to process and make the corrections now. But I think moving forward, I think I'm just gonna do videos instead of lives. I think because I'm obviously not doing what I'm supposed to with these lives. If you know what I mean. All right. All right, so this is what is this? Low volume and ATR. This was the Discord alerts. So on the Discord, this is scripts here that was making alerts. This is me simulation trading throughout Friday. And I did well initially. I was taking my time. I was a lot slower. I was just discretionary trading, right? So technical trading. I was going a lot slower. I did well initially. I think just trading one contract on and off and on and off. I think I was up like 1,200. Then I got back to the point where I was down to like 200. And then I think I closed the day being up like 400 or 500. So, one time I got down to 200, then I made it back up to 1,000, and then I back down, and then end of the day right at 400 or 500. Nothing impressive there. But on the 1 minute time frame here, Discord alerts. This is essentially the one strategy or the two strategies that I have set up for the Discord alerts. These were the alerts that would have been given, which are not great. On the 1 minute time frame, I believe it was given on the 5 minute time frame. There's 1 minute time frame there. So these alerts here, as you come under 5178, apparently they start looking better there. So all these here don't look that great, but then when you get under 5178, most of these look pretty good. That one, not so much. That one. All right, so let's add the moving averages. It's the dollar sign. All right, so moving averages. Like I said, when I got under 5178, was that anything significant? Somewhere in that range. Don't really see anything outstanding happening there. Not on 1 minute, 5 minutes. Nope. 15 minute. Okay, so here, what we're seeing at least is that this strategy started working when it got below this large bullish. These areas here, once we got under that, then we did start to, the alert started to work. Interesting. All right, but today, let's just put together something simple. Something that just works for the for Friday. Not 15 minute. Let's go to the 5 minute. All right, so what's happening here? So essentially, I mean, we'd all like to be able to trade in both directions at any given time. However, when the stock is moving down, when it's in a downward trend, you want it to be taking shorts. When it's moving up, you want it to be taking longs. The funny thing about that is you don't know when that's going to happen. You don't know whether or not you're in long territory or short territory. That's what the technical analysis comes in at. You want to be able to discern that if you get below a certain level and you come back and retest in here, then everything else is going into the gutter, or that if you hit another price level here, that from there you're going up. But will it range and then go up, or will it just go straight up? What time frame are you looking at? Because if you're looking at like the 5 second or the 15 second time frame over here, then that would look lovely. But if you're on the 5 minute time frame here, then that right there, even like 15 minute time frame, that right there is just almost looking very range-ish. It doesn't look so great. A lot of times I've seen that, under the 200 period moving average, which is red line, under the 200 period moving average, you want to tend to shorts. And over the 200 period moving average, you want to go for longs. This is a 15 minute time frame, so let's see what that looks like on the 5 minute time frame. Similarly, on the 5 minute time frame, we are under the 200 period moving average, and we're taking shorts. Over the 200 period moving average, we're taking longs. Under the 200 period moving average, we're taking shorts. Over the 200 period moving average, you're taking longs there, right? But then what are you doing when you get here? So, and then when you get here, are you looking for shorts during this period? Are you still looking for shorts? Or have you already changed your mind and figured that you've got a higher low there, and you're already starting to look for longs, even though you're under the 200 period moving average? That's the kind of things that you really have to look out for. That discernment there. even that here on the 5-minute time frame, this is under, right? I don't know if this box is going to show up. So all this is under the 5-minute time frame, 200 period moving average. But if we go to the 15 period moving average, and all this, remember this over here was above the 200 period moving average, essentially, on the 5-minute time frame. So we'll make it blue. All right, but to me that looks purple. But here on the 15 period moving average, this is all under the 200 period moving average, right? So again, if during all this you're under the 15 minute 200 period moving average, and so you're still looking for shorts because you're under this, you're still looking for shorts, you're still looking for shorts here, you're still looking for shorts here, you know, you probably kind of missed the boat, because all this, once it got here, it was, you know, it's really just ranging and turning around. So should you be looking for shorts under the 200 period moving average on the 15-minute time frame? I don't know. How about here, where you're under the 15 period moving average? Now we are short. Now we are going short, right? So time frame perspective is important. Okay. It'd be hard for me to explain what I did on Friday. It was really working for me. So, and you know that I have all this other data over here that I collect, right? The size of the bid, the size of the action of the market, the cumulative action of the market, the largest bids in the market, the largest ask in the market, what the level 2 is looking like, and I guess not just the level 2, but I guess is the first position, the first index, the first level of the market depth. How large are the bids and the ask, the size? Okay, but what I was looking for, yeah, that was the 15-second or 1-minute time. Yeah, that's the 1-minute time frame. So it's just harder to see over here. So typically what I do is I have another screen pulled up so I can see the 1-minute time frame on a larger perspective. But I still do have this screen pulled up so I can see what's going on an intrinsic basis. And I came over here and I believe what I was looking for, scalping, right? So scalping, definitely scalping. All right, so what I was looking for as the market moves up, when I probably have another one that's all marked up from when I was working on it. It's not this one. Eagle Wings. Nope, it's not this one. Let's see, first two. All right, so this is what I had up on the 1-minute time frame. I think I was pretty much running on the 5-minute time frame. So I have the 5-minute time frame open, the 1-minute and the 15-second time frame. Looking primarily at the 5-minute and 1-minute time frame. So what I was looking for, one thing I've been seeing, and everybody else that's trading probably already knows this, but it's just like coming as a revelation to me, which is, I don't even know where this was. I hate when I move stuff like that. But if you look, let's go back to a cleaner screen. So the 5-minute time frame. So if you look here, you see that as we're in a downtrend, right? As we're in a downtrend, for the most part, the high of this candle, the high is high, lower, 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 lower. All right, so this is on 5-minute time frame, right? So it pretty much just says to me, like, when you're looking for scalps, if you have a lower high, then it's likely that you are still in that downward trend, right? So that's one of the things I was using when I was trading, and it really worked for me. But now I'd also look for a few other things, and I really got to spend more time working on the technical analysis because it works for me. But you see now I'm just drawing a blank. But you see here, you're like, all right, well, why did we get that bounce there? Why did we get that turnaround there? Well, because it came into this region, right? So when you get this zone of consolidation there, again, all you millionaire traders, I'm sure you already know this. When you get this zone of consolidation here, you get this zone of consolidation here, right? From boop, boop, to boop, to boop, boop. All right, so then you come over here, and likewise, that's where it made its rejection at, right up to there. Add a little bit more help here. Same way, here, here, and then here, and then it went down. All right, so when you get to this area here, so if you know that you've got this area of potential resistance or supply, when you get to this area here, you don't take the short right away. This would be, and this is why I wanted to come on today. To part of my homework is to look at this. You definitely don't want to take it here. You don't want to take it here because you made a higher high. And also, one of the things I notice is as you're moving up, you have higher lows. I know everybody's like, of course, man, what are you talking about? This is trading 101. However, see here, low, higher low, higher low, higher low. Did have a retracement here, but you haven't broke below this zone here. So you take it short or do you take it long? But higher low, higher low, higher low, higher low, higher low, higher low. So when you're moving up, I'm seeing that you're looking for higher lows. When the stock is moving down, you're looking for lower highs. That's just pretty much it. So again, here, you don't want to get in on this candle because it made a higher high. But this break, this lower low is the first indication that, yeah, you're going to be moving down. Then you get a lower low there too, right? So you could enter here. You could enter at the break here, and then you need to set your stop. You need to set your stop. You get in here at the break of this low, because it means that now you don't have that carrying support in the upward direction. Get in at the break right here, and then your risk would have to be here. Right? 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 Because all right. Yeah, so we need to continuously get lower highs, right? Because in order for us to be out of this ascending trend, we have to make a lower low, which we did essentially here. But from what I've seen, you need to clear at least 2 ticks below or so. You need to clear a couple ticks below this, not just equidistant. So you need to go. So this one is fine, right? So once you go below, then you take the entry, and that means that you've broken that uptrend, that ascending support. But you're not really in a downward trend yet until you have lower highs, right? But you do have a lower high here. This high is lower than this high. All right, I mean, you see it went back up there, so it retraced. So because pullbacks do happen, and you just have to have conviction of whether or not this zone here is a significant supply zone. Once you get in here and you say, all right, we're rejecting off this line. Well, what happened when we got to these candles, right? So these wicks here at the top. So we have to be sure that we are having lower highs from here to here, lower to lower to lower to lower to lower. All right, so your stop needs to be here. Like I said, at least a tick or 2 beyond that. All right, and then so from there, that's your risk, and then here's your reward. But all right, but where's the target at though? I think typically the way I was trading it the other day, which, I mean, like I said, it works for a scalper's mindset. 1-to-1 here to here, right? So retesting this area in here. You know, could you get more on that? Sure, I guess. Do you see another strategy? Maybe. But yeah, so it's at least a 1-to-1. So there, or a 1 to 1.5, right? So from here, that line is, what's that? 0.4%, 0.14%. It's 0.14. So if we go down here to retest that bottom there, so 0.14 to 0.25. So yeah, 1 to 1.5. So the risk is 1R and the reward is 1.5 plus 2. Okay, so that's pretty much all I was looking for, and I was just doing that. So on the 5-minute time frame, as well as looking on the 1-minute time frame to make sure that we got some type of protection. But I was mostly trading on the 1-minute time frame. And like I said, it was working when I was moving slow and taking those high probability entries. Then somewhere along the way, I got sloppy, and my reward started getting, my risk started getting wider and wider. And usually I found that when I do that, I'm just kind of gambling. I don't really have much of an edge at that point. I'm just taking a position and just kind of hoping it's going to move one way or the other, and or I'm getting in late. Yeah, I think usually I find when I do that, I'm getting in late. So let's see, I don't know if I can find an example here. Yeah, I don't know where an example would be, but let's see what the coding looks like on this. All right, let me review the global dictionary. All right, so I think global dictionary, here it is. All right, so this is what I had to do for the global dictionary. I guess I won't go through it right now. It'll be just as well just to show it to you guys. But essentially, it's actually really easy. For some reason, whatever tutorial I was looking at earlier, it was making the global dictionary quite hard. But so for the global dictionary, you need a send. You need a send indicator. And you need a receive indicator. So the send indicator, you have to use using easy language system namespace, using collections, and using tsdata.com. And I guess it makes sense because you're trying to find some data in common to save and one to look at. So tsdata.common, and then the variable that you want to use is going to be a dictionary. It won't be just regular dictionary, it'll be global dictionary. And that's really the main difference. So global dictionary, and then you just say that you're going to create that dictionary one time, and then you want to add just like you do for any other dictionary, right? So dictionary, add, we're going to have the key. All right, so this is the key. So I made the key essentially the date and time plus the symbol plus the all right. Well, what happened to my stuff here? All right, so so I have the date and time plus the symbol plus the interval, which the interval would be, well, there's 5 seconds, so it would be the number, not the second, not the type. So here's the type, whether it be seconds or minutes. Here's the number, whether it be 5, 10, 15, that kind of thing. Since I am putting all this into being the key for the dictionary, it needs to be of type string, right? So to get date and time, I'm putting it into a string using var date time, that format. Okay, and then symbol is already a string, and then bar interval, that number, we need to change that number from a number to a string. So we use string, and then we're going to have 0 places, and then there's a string here. All right, and so then you go over to your global dictionary receive. You're going to do the same thing using the easy language system. These are your namespaces. Using the easy language system, using collections, because you are using a dictionary, so you have to use collections. And since we are working with a dictionary to be in common, we need to use tsdata.common. I think this is the main part that I was missing before. I didn't have this when I was working on trying to share dictionaries before, so now I know better. All right, so then again, we declare a global dictionary, and you don't have to use the same name. If I'm not mistaken, you don't have to use the same name. See, I put an R there instead of this global DICT. I put a DICT-R. I'm going to create the global dictionary, and then so now we're checking if we have that key. So remember, this is the key. All this, the string of the date time symbol plus the symbol plus the interval plus the interval type. So if we have this as a key within this dictionary, if the dictionary contains that, then what are we going to do? We're going to plot whatever is in there. So we're going to plot. Now again, in order to find what's in the dictionary, you have to put the key in. So we have to say what is the items at this key. We have to put all that key back in, unless you go up here and you say, all right, and I don't think you can use key because it's not a protected word. So you go up here and you could say, we could have a variable that would be key, and then a string, and then we could say that the key is equal to whatever this is. That's the key. So here, instead of putting this, we're just going to put key. So if global dictionary contains that key, then we're going to do what? We're going to put that key in to the items. We're going to find out what the items is that has the key. All right, then when you verify it, it works. It works. It works. All right, so that's that. Let me do something else now. Do something else. Okay. All right, so that's global dictionary. And initially, what I was doing was initially what I was doing was I wanted to be able to take this data here, and you know that I have the master token, which is saving all the data as it comes onto the computer. It's saving all the data to a text file. And then I go back, and for every single indicator, I'm going back to that text file and saying, hey, do you have a key for this? And then it's pulling it all up. It's going to the text. Every single indicator is going to the text file for all these different bars. Not only do I have it here, doing it here on the 1 minute time frame, but also have it doing it here on the 15-second time frame. Now there are different text files, but nonetheless, what I'm still calling on that file a lot. Calling on it a lot. So instead, what I could do is I could take the global dictionary and take the information from the master token, put it all in the global dictionary. Then all these indicators can pull from that global dictionary instead of pulling every time from the text file. So I don't know if it'll be that much quicker, but I feel like it will be. All right, so let's put a script together on something. I don't know. That's the main thing I wanted to go over was the global dictionary. And like I said, just kind of get back into coding again, because I've been off for a week. I've been getting a rental property together for a week, and it feels like I'm completely out of commission. So, all right. So one of the things I did want to do, just I don't think it'll add a lot of value, but just because I was telling you that, when you have those lower lows, it kind of means that you're in that you're in a downtrend. You're in a significant downtrend. I mean, I know some people would say, yeah, well, you're under the moving average, so you're in a downtrend because you're under the moving average. Yeah, when does that change though, right? So here so you're under the moving average for all these, yes. All right, but here you start getting that higher high, so it breaks the downtrend, and now we have a higher low as well. So I think I want to do something that incorporates both the higher high and the higher low. We're gonna make this interesting. All right, so let's do this. Get that out. All right, so we're gonna look first. We're gonna look for this reversal. We're gonna look for a reversal using just the simple concept of that lower highs and the higher lows. So let's just first say that if we have lower highs, then we're in the downtrend. So let's just plot our lower highs. No. Show me. All right. Wishful thinking, I know. And I know we're supposed to stay away from we're supposed to stay away from reversals. I've got to get rid of those shortcut keys. It's screwing everything up. All right, so we're going to say if the low is lower than the low before, then we're going to plot something. Okay, so if low is less than low of a bar go, then plot 1 equals low. I'm gonna make it yellow. Yellow, she says. Plot 1. Back over here. I'm gonna add, what does it show me? And then reversal. And today's date. Remember, Try to have some type of nomenclature, some type of syntax for saving all your files, right? So that you can find them easily and you know like what iteration you have. All right, so these are all the lower lows. This is what we plotted. All right, so you see we have lower lows, lower lows. Here we don't have a lower low, so it didn't fire off. Here we don't. This wasn't a lower low. The low of this one, yellow. I can't read yellow. Not well. 5184.25 is the low there, and then the low of this one is 5184.25. So we need to say that if it's lower than or equal to. All right, there we go. See, it popped up. I know, I'm picky. Okay, so now what we want to do is we want to make that a condition. No, we're going to say that if the low is greater than the low before it of Argo, right? So that's how you reference that. Then plot 2, we're going to put it on the low, is going to be blue. All right. You see there what happened, right? So here we had lower lows, lower lows. Here we had a higher low. Again, how do you trade with this though, right? Because it looks good after the fact, right? So it looks good after the fact. But again, like when you're trading, this is not going to show up until the bar is done. That's fine. But now the bar is done, the price is all the way up here. So you take that entry, have this as your exit, and then look for the move up, right? Or when you take this entry, this looks good, you're looking good, you're going long, you're looking good. Now all of a sudden you see this yellow, and you're like, okay, well, I think I should get out because now we have a lower low. So I think what I want to do is after we get the blue, if we then get, we're gonna make the blue a condition to move forward. So we're coming down, we get the lower lows. Now we get a higher low. Start the condition. And if we get a higher low again, then we're good. We need to get a higher low and a higher high. Because remember, in a downtrend, you're going to have lower highs. That's what we should have been plotting. We should have been plotting the highs anyway. All right, so we're looking for the highs. That's what we're looking for. If high is less than high of a bar go, we're gonna apply it to low, so that's fine. All right, let's mute this blue one out just to see what's going on. Okay. All right, so as we're coming down, if the high is less than the high of a bar go, then we know we're still in a downtrend. Now, the high is greater than the high of a bar go. So, high is greater than high of a bar go. Let's get this out. And we're gonna plot blue. All right. So not only do we want to know that the high has gotten higher, but again, like we said, in an uptrend, we're typically seeing that the low is higher than the low before it. I'm being summoned. Okay. All right. So we have to say, so if this is true, then we're going to start condition 1 being true, and then we can move forward with our looking for the lows being higher. Okay. If high is, but then we also need to turn that off too at some point. If high is greater than high of embargo, then condition 1 equals true, else condition 1 is equal to true, else condition 1 equals false. I can do that. Okay. All right. Now the only thing is that we need to turn this off at some point. So how do we turn condition 1 off? Turn condition 1 off if we're getting a high greater than have bar go. So we're coming up. Let's turn it off if we drop under the 9-period moving average. So if the low crosses under the 9-period moving average, then condition equals false. And then we can kind of start all over. All right, so if condition 1 equals true, then begin what? Begin if. So now, like I said, when we come down here, if we get the new high, right? The new high. Now, if we get a higher low, then we want to plot a green, right? So if low is greater than the low embargo, then plot pre low green. End. Bam. All right, so you see we have the greens here. Okay, very good, very good. All right, so you see here, we are coming down, downtrend, downtrend, downtrend. This is our first, this one shouldn't turn on just yet. This when this one turned on, this is condition 1 being true. So we don't necessarily want to take this one right away. So we shouldn't turn green here yet. So if condition 1 equals true, so if condition 1 equals true, so we need to keep a count because we don't want to plot on that first green, that first condition being true. So if condition 1 equals true, then count plus equals 1. All right, so, and then if it's false, then we're going to also say count equals 0. We're going to end, we need to make a begin for this. We're doing a whole thing. All right, so condition plus 1, if low is less than, low is greater than low of embargo, then, so and count is greater than or equal to 2, then plot. Thought we put count up here. No, count. All right. Now, I think it didn't do it here because we didn't reset. We didn't get under the, we didn't actually get over the 9-period moving average. So to reset, we can say that either the price has to cross under the 9-period moving average or we have a large bearish candle. Large bearish candle means it in the bearish trend at some point. So low crosses under this 9-period moving average, or bear, and so bear, or it's bearish candle and the range is greater than range. Just saying that the range of that bearish candle is greater than the average of the candles 7 periods long. All right, see, we got rid of that then. All right, so now we only have these guys here. Okay, so this looks good. except for this one doesn't look great, right? This one's okay. This one's okay. These you're getting to the top of the move, right? So I mean, we probably need to code something in. We'll add a vector with some values for swing lows and swing highs, and that way we can avoid these areas here. We don't want to get too close to. We don't want to get too close to these ranges here when going long. Okay, so yeah, as long as the price is moving down and you're away from one of these consolidation zones, then you can take one of these guys. You can take that entry there, or maybe just take the first entry. Take it at the break. But if you took this one, well, you would take it at the break, right? Would take it at the break here, so you have there to go. And then you see this area here. All right, so you take it at the break, and you have there to go. Okay, I don't know. Maybe it'll work. I think I'm gonna go back and add some conditions such that, like I said, there is a vector that holds these swing low levels. These swing low levels with consolidation, they're going to be important. All right, maybe I'll do a video about it later, and then I'll just post it. So, guys, I hope you got a little bit something out of this. This is just a very simple script. Very simple. Let's see, does it work anywhere else? At least it keeps you out of these bad low moving traps here. Right? So, I mean, it looks like it's doing okay. Looks like it's doing okay. Like I said, probably what you do is you get in here and then get on the lower time frame, and then you would find an entry. Okay. All right, guys. I'm Eric.